African Development Bank has committed to give the East African region $1.4 million for a highway between Kisumu and Kakira. That is Kisumu in Kenya and Kakira in Uganda, for a 4-lane highway that is meant to ease traffic on that side or leg of the road. But we'll be discussing that and more in our subsequent shows. It is Money and Markets, and I'm Charles Boyd, your host. Welcome. It's been a tough run the last 3 years for Uganda's economy. There are areas where, of course, we made some gains, though. But for most of it, it's been quite challenging. However, the recent APSA report on the economy of sub-Saharan Africa is actually a bit promising. There's some green shoots that the country can anchor on for the future. Let's take a look.
I think that index around capacity of local investors speaks to the level of investment that we have made locally. So one of the key or immediate wins is around improving the saving culture. How do we as a nation think about investments for the long term? How are we investing in products that will provide returns over a sustainable period? Are we participating in equities markets? Are we participating in unit trusts? So really a way to propel that, number one, will be around product diversification. Number two is around improving our savings culture as a way of boosting the capacity or the per capita in terms of pension assets that we have available for investment, because those will only be triggered by an increase into the savings by the wider population. The way we see things, really, I think looking at the way the economy performed in 2022, I think statistics are indicating that we should have posted a growth of 4.7% in 2022. The drivers of growth were around agriculture, they were around manufacturing, services and industry. So all sectors generally posted some growth. I think going into 2023, we expect that growth to still be propelled. Agriculture will continue to be a key play. The manufacturing industry will continue to be a key sector that is going to propel growth. Oil and gas, of course, does present great opportunities, given what we saw in terms of the launch of the Kingfisher oil rig just about a week ago. That's an indication that the oil and gas story is coming to fruition, and we do expect that activity to spiral and have a multiplier effect in terms of the value chain around that, and that will be quite one of the key contributors to spurring growth going forward. I think for us, when we look at financial inclusion, one of the things that the PSST spoke about is what the SME sector contributes in terms of GDP, where he says 70% of the economy is driven by SMEs. So we have a strong SME proposition, as it were, and it's an area of focus for us as we look at the medium-term plans of APSA Bank Uganda. So we will continue to play in that arena very strongly by responding to the product needs of our clients. So that remains a key area of focus. When we look at the lower personal segment, we also will be looking at products and channels that are going to bring in personal customers that are at the low end of the spectrum from a financial perspective. And we do believe that by investing in these technologies that help us provide low-end products that provide accessibility to finance is one of our ways of penetrating or bringing in financial inclusion into the financial markets ecosystem. As you know, we, on an annual basis for the last 6 years, have been publishing what we call the APSA Financial Markets Index, which is an index that gives an overview in terms of openness and accessibility to financial markets across the continent. At its inception 6 years ago, we had 17 African countries that would participate in this index on an annual basis. This has since increased to 26. When the index was initially introduced, Uganda was placed at number 10. We have since improved in ranking year on year. Last year, we moved from 10th the previous year to number 6. And this year, what is remarkable is that we have increased or improved positioning to number 4 out of 26 countries. What does that say about the Ugandan financial markets? It means progress is being made in terms of openness and the ease of doing business in Uganda. There are certain aspects such as the access to foreign exchange. There is transparency around regulations, the regulatory environments, the strides that have been made by the central bank to, adopt matters such as sustainability and provide guidance and focus in the ESG agenda. going forward into the medium term. So it's a great result for Uganda and showcases it as an investment destination where investors are free to invest their capital and take it out as they please, because the foreign exchange market is fully diversified and not controlled. It really focuses or is played out using market forces. So for us today was about releasing the report for 2022. We are privileged to have had the Deputy Governor who participated on the bank of the Washington World Economic Forum, where he was part of the debates or the discussions around the 2022 report, and he did grace us with his presence today. So it just showcases the strength of the financial markets of the Ugandan continent, and I think the result places us at a very strong position in East Africa. We are top-ranking country from a financial markets perspective in East Africa.
If there's one thing that the recent pandemic, COVID, brought to the fore, is the fact that the time for cheap health services, even in Uganda, is over. If you look at the bills that families and people had to brave, you would appreciate the fact. And today we caught up with some of the private sector operators of health service facilities in this country to find out what they're contending with to keep these facilities afloat and what it would take to ease the burden of providing services to the populace. As the cost of living escalates, so is the cost of providing health services. Today, health service providers are rooting for government support to subsidize some of their activities, given the weight of the social value they deliver.
Government, just like it has done for manufacturers, it can provide a loan facility for hospital operators at a reduced interest rate, so they are able to give a low, affordable service to the people. Government of Uganda gives loans, tax exemptions and whatever so there should be a category. For example, the owners of schools were given exemption on taxes. They don't pay income tax in the schools, but hospitals are not.
Some of the players assert that the services they offer directly answer some of the challenges government is grappling with in the effort to extend quality health services to the population, especially to those at the bottom of the pyramid.
We conducted research and found that majority of the clinics are being operated by people who are not qualified. We also discovered that the clinics in the slums are the ones that are distributing expired drugs. It's a network, and then there is self-medication happening all over. And we also discovered that there are very many people who never have a chance of seeing a medical doctor. And we also discovered that most clinics are not equipped. So they just look at you and then they prescribe. So there's no diagnosis. And in the process, you were injected with so many medications that are not even necessary. So we thought that we would start an organization that would change the trend of things.
But as private players come in to plug the gaps, resource mobilization remains a daunting task.
Government should facilitate those who are starting such initiatives, because the service we are doing is meant to be service for the government. Just like a teacher who starts a school, he's actually doing a service that the government is expected to give it to its citizens. So that's what I'm saying. But it may not be profitable to borrow from a bank at a market rate interest and then use that loan to build a hospital.
Some operators are now investing in building global and domestic partnerships to deal with the funding challenge.
We also partner with University of Minnesota Medical School, which sends surgeons here to conduct free surgeries. That is a program that we did for 3 straight years until we went into the COVID break. But this year we are resuming that program in April this year, in May as well, and later in the year.
And 12 years ago we decided that we would start a small hospital whose focus was maternal and pediatric care. And a friend of mine, an older priest, said that he would make a gift. He had inherited some money for us to, a founding gift to start the hospital here.
Globally, it's a known fact that the cost of health services has gone up. Domestically, the COVID pandemic and associated cost of treating it gave the country a rude awakening about how big health bills can get. To sector experts, this should serve as a good case to rally all stakeholders to offer the requisite support to private health service providers, especially at the level of policy.